Welcome, everyone. I'm Mike Brashazade.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journeys, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey everyone, welcome to another episode of the What Matters podcast. I'm Mike Brashazade, and today I'm with my co-host Ashley Ward. And we are also with our esteemed guest, Todd Resnick. Todd, before we dive into a little bit about you, I did a little bit of recon on you. I hear that you and your wife love to travel. You guys like the theater, the arts. You have two kids, Madden and Bryn, if I'm not mistaken.
Yep, correct. Yeah.
And one thing that I was really interested in, because I have not gotten to travel this summer, where have you gotten to go? Any place that you'd like to share?
Yeah, I somehow, my wife and I decided that this summer was going to be our summer that was quiet and we were going to stay home. And then I counted the other day that I was in 9 different cities from the time school ended until the time school began. So it was fun. I have to say, the nicest place to visit was New York because we hadn't been there in a long time. But we went to Costa Rica. My brother-in-law lives in Costa Rica. And we go there typically every summer and visit him and his wife and their daughter. So that was fabulous. Absolutely amazing, as always.
Oh, really cool. What part of Costa Rica?
They're on the West Coast, so right on the ocean, overlooking the water. And it's a good life. It's a real good life.
Wow.
Changes your mindset. The moment
nice.
you land, it's like the moment you land, everything just kind of washes away and everything gets a little easier. And then you get in your rental car and you drive somewhere and all the stress comes back. Because driving there is one of the most treacherous things that you could ever do. Yeah.
How long did they live there for?
They've lived there a couple of years now. He was a very high performing entrepreneur and just decided life needed to go in a different direction. So he and his wife moved to Costa Rica, and he actually runs a really cool business doing retreats for executives down in Costa Rica. So he basically 4 or 5 times a year has 50 or so executives and high performing entrepreneurs come down to Costa Rica, spend a week in the jungle doing all sorts of stuff. And, hopefully going back to their lives with another perspective, new focus, energy, and everything like that.
Oh, that's really cool. That's really
Yes.
cool. I've actually been on a couple spiritual journeys, and one of them was in Jaco, Costa Rica. And I got to tell you, it was like 5 or 6 days, and there was a shaman involved, and it was one of the cooler experiences I've ever had in my life. So I really enjoyed that.
We could get a group of us. I've done it twice. He lives right near Jaco, actually, and so
oh, wow.
So I've done it twice now. Same thing as you with the shaman and we'll talk about it another day. That's a different podcast. That's a very different podcast.
Oh,
Yeah.
Very true. Well,
so cool.
You know what, Todd, thank you very much for sharing a little bit there. Tell us a little bit about your background, experience in the financial industry. What led you to become the co-founder and president of 17?
Oh, wow. So I grew up in Cleveland, Ohio, which is a great city. And many basically took my life towards New York. And one day a family friend, I'll give you the quick version of it. A family friend said to me while we were on vacation that if I wanted to be really happy, I should go into financial services. And my response to him was, what is that? Because it was a whole foreign world to me. And I think 2 years later, I was working with a team at Merrill Lynch. And then the team moved to Morgan Stanley. And then sometime in the, call it mid 2010s, around there, we started talking about going independent and building an RIA or joining an RIA or really just leaving the wirehouse world. We just didn't know what it meant. Everybody talks about it. You go on LinkedIn nowadays and there's so much banter back and forth about independence and independent broker dealers and wirehouse. And a lot of it doesn't make sense if you've been in one environment your whole life. So we did a ton of research, a ton of education, and decided in to launch our RIA, our own RIA in 2016. So just about 7 years ago. So it's kind of been a real incredible experience, from that day in 2007 when I started in the industry until here we are today, 16 years later, and running an RIA. Did not expect this to happen at all.
I bet. I mean, coming from the fact that you started in 2007 and 2008 and 9 were just an absolute, I'll call it a bloodbath.
Yes.
Tell us a little bit about that. I mean, you're just kind of getting into the industry. A family friend said you should get into wealth management. You get into the industry. I mean, the market drops, 50+% in the next, it could have been even more than that in the next couple of years following. What was your thought process behind that? Were you like, I got into the wrong industry, or were you like seeing opportunities?
No, I was like, well, so I got my first client at the top of the market in 2007. When you look back at what the top of the market was, I think I was too naive to know any different or to know what was going on in a way. Being new to the business, I think in 2008-9 was actually really advantageous because you didn't have a lot of clients that were calling you and freaking out and losing their all their money. And lots of people who are out there weren't being called or weren't paying attention to what was going on. It was hard to not pay attention to what was going on, obviously. But so there was a bit of there was this naivete of like driving to work. I still remember some of the days driving to work and hearing about the Dow dropping 500 points, 1,000 points, whatever it was at that time. Bear Stearns going out of business, Lehman going out of business, and I understood it and I internalized it, and I definitely lost sleep. But at the same time, I was like, all right, I'm new to the business. I'm really going out there trying to build something. And I didn't look at it as like, this was such a mistake. I can't make it. It was really the opposite of like, hey, I've got nothing to lose. Let's go out there and put all the energy into it. And so I really just focused on thinking differently, trying to get in front of people to talk to them about what I did. And, it worked for sure.
Very true. I mean, come to think about it, you weren't doing damage control all day like everybody else was.
No, yeah. It was a little bit of an easier experience. Now, mind you, my team was definitely going through that, and I was supporting them through all of those days and weeks. But luckily we made it through that period of time and moved to Morgan Stanley, where we were really fortunate to have so many of our clients join us. And then we did the same thing again, 7 years later, give or take, of making this choice, and they came along with us a second time.
Thank you. I love the answer, and thank you for sharing.
Yeah, that's great. So can you give our audience a little brief overview of your firm? Tell us about 1-7, what you guys are about, and how you guys are a little bit different.
Yeah, so 1-7, we actually, I'll take you back about 8 years ago when we started this process of starting the RIA. We met with a marketing firm, and all of us did interviews, one-on-one interviews, and the commonality between all of us was that we looked at the relationship, or the one-to-one relationship, as more than money. The asset allocation is important, the returns are important, the volatility, all that matters. But when you build a relationship with a client that is about their family, that is about their physical well-being, their community involvement, when you really start to know the people on that level, which I think is what most people in our industry strive for, it creates a different dynamic where good returns don't change things, bad returns don't change things, because they know that you're there for the long term. And when we were locked down during COVID and my clients were calling me asking how I was because I was stuck in the house with kids, and they were, retired and sitting in their house with no cares whatsoever, that's when you know that you've made an impact in their life. And so that's what we're based upon. So the 7 of 1-7 stands for the 7 pillars of wellness: financial, physical, family, community, work, mental, spiritual. So my goal now, when I'm working with my clients, is to build relationships in that way. And then my goal is, in terms of running 1-7, is to build relationships with our advisors where we really can help them change their lives, change their business to build what they want. So we really focus on our mission, which is creating life-changing opportunities and helping them take a look at their business in a different way, take a look at their life in a different way, find more time to go to the gym, find more time to travel with their family, and then help their clients do the same thing.
I think that's probably one of the best answers that I've received for that question. I was trying to understand the origin of your guys' name, and because usually in this space, you get names that are very fitting for this space. Yes. like a paragon or a eagle or
right.
things
well,
like that.
It's got to be about a tree, a land formation. Those are typical things. And so I'll tell you as an aside, when they did come to us with this name 1-7, we're like, well, what about something like Seven Timbers or Seven Oaks? And they're like, no, that's what everyone else does. And we didn't want the name to have anything with financial in it. So we didn't want to be advisors, planners, partners, wealth partners, anything like that. We wanted to really think a little differently. Most people love it. Few people have told me they hate it, and that's okay.
I could tell you that I think it's clever, and thank you for
Thank
sharing. Let me ask you this. What are some of the most valuable lessons that you learned along the way in your career?
Oh, wow. So I'd say the first thing is to ask even more questions than you think you're asking. That's the first thing I learned. Even the day that we launched the firm, July 1st, 2016, there were still things I didn't even understand about what we were doing and what was going on, how it all worked. How an independent broker dealer partnered together with the RIA, how compliance, in how compliance needed to function. And so I think the biggest thing I would say is for myself is that education. Advisors more and more are looking at making changes, moving their business somewhere. And, the thing I really try to be more than anything, I love every advisor who's interested to look at 1-7, but at the end of the day, we really want to be consultants and help advisors understand the business and understand the differences between opportunity A and B and C and what it means to go from here to here to here, what it means, what the financial aspects are, the technology, the compliance, all those things. The more we can educate as a whole, the more we're going to help advisors make the right decisions. So just education, asking questions, just being prepared for the unexpected and not, not letting it hold me back, I guess, is the biggest thing that I learned along the way as well. Because I was not going into this thinking that I'd be an entrepreneur when I started as a advisor. It wasn't in my mind.
Wow.
Right. And so on the contrary to that, was there any significant challenges that you and the other founders faced while building 1-7, that you had to overcome and possibly learned from?
I'd say everything I just said was also part of the problems and challenges as well. Building a tech stack that we realized was not the right tech stack, doing compliance in a way that wasn't the right way we wanted to ultimately do it, doing billing in a way that didn't work for us. All those things that we learned were really good experiences. They created a lot of challenge in one period of time, but then we solved it. And so now, again, as we talk about advisors who are looking to do this, whether it's create their own firm or join a firm or whatever it is, one of the things we always talk about is like, we've made all the mistakes, right? We've been out there, we've done this, we've had those sleepless nights of why'd we do this or doing something wrong. We can help people avoid that. So I think, trying to build something from scratch, no matter what industry, is a challenge. In this business, the good part is that you don't have to do it on your own.
Thank you for sharing that. And let me ask you this. In the early stages of your career, were there risks that you took that contributed to your growth and success as of today?
Starting 1-7 was the biggest risk there was, right? I think any founder would say that, right? As I joke with advisors now, because every advisor, their biggest thing is they're nervous about leaving because will their clients come with them? And I said there was no harder phone call than on July 1st, 2016, where we asked our clients to move to a firm that had a name that made no sense to them, that had no AUM, that had no revenue, and we were just asking them to trust us, right? And I say to them, I said that's what it is they trusted us that we were doing this the right way and they were going to be okay. And now you look at where we are, where we have this critical mass from a company standpoint, where when you look at our website, there's dozens of advisors. We've got the AUM to back us up. So that was the biggest risk ever. I still remember. I'll tell you, as in a vulnerable moment, the night before we went live, we still didn't have an operating agreement done, and there were still some legal issues. And I literally went somewhere. My kids were with my wife, and I just sat down and started crying because it was just the worst experience that nobody really prepared me for, and I felt like I was on an island. So that was a really hard time in life.
Wow. Well, so if you could elaborate a little bit more on that, right? Because I got that phone call back in 2012 when my financial advisors, they had left their current platform. And it wasn't quite a wirehouse that they were with. I think before that smaller platform, they were with the wirehouse, but then they went. One of their guys went and opened up another firm, and then the two of them went and opened up their thing, right? So I'd followed them from 2010. I followed them the first time. Then 2012 was the big phone call, and I followed them the second time. And look, I think at the time, I didn't. It wasn't even like I even had seven figures with them or anything. But to them, I think even every $50,000 to $100,000 counted for them, right? And so I followed them. They're similar to you guys now, managing close to 5 billion. And that was in 2012. And I think, what are we, 11, 12 years down the road from now. And I remember getting that phone call, and I was honored myself. I was honored to follow them. I didn't feel like I was doing them a favor. I felt like, if anything, I wanted to see them succeed. Did you feel like you got that same buy-in from your clients?
Well, 100%. I mean, look, the proof is in the pudding, right? When you look at the numbers at the end of the day, where are you in terms of where you started and where you finished with the transition? Then yes, and that's one of the biggest things we take pride in, is when our advisors are done with their transition, we look at those numbers and we consistently are updating them, and everything is process oriented. So we're always looking at where they are in their process. And yeah, I mean, that's what this business is the relationship. And when clients are willing to make that move and take time out of their day to sign paperwork, or now it's electronically signed paperwork, or, move over and start a new system that they have to log into, those are not things you take lightly. And
right.
Everyone makes it out like, we all have 100 apps on our phone and people download a new app every day. But this is different than just downloading a new app. It's a new technology, a new system, a new reporting software. And so it's not something that you ever want to take lightly. So that is the biggest sense of pride. And still today, I think one of the most rewarding parts about this is that my clients specifically, and I'm sure there's other advisors out there, my clients always ask, like, how's everything at 1.7? I think they want to know that we're growing. They want to know that we're thriving. And they take pride in the fact, at least that's my experience, is that they take pride in the fact that we've made it, right? Because I still remember, if my old manager's out there, I won't say who he is, and he was a good guy. I still remember him telling me, like, there's no way you guys are going to be able to get this done with all the changes and regulations and DOJ and this and that and the next thing. And naively enough, I just still said, okay, cool. We'll take our chances. And, here we are. Like we said, 7 years later, here we are.
And so this is my last question pertaining to that. And I hate if it sounds rhetorical. It's just a curiosity that I have. So you were coming from Merrill Lynch at that point,
Morgan,
right?
was Morgan. So Merrill to Morgan to 1.7.
My apologies. So coming from a wirehouse and starting 1.7, right? And all your clients are used to, the wirehouses. And then you're like, okay, well, we're starting this offshoot platform that's not a wirehouse. How do you think they took that?
Going back to it, they came and yes, there was that consternation, and we did a lot of emailing and email blasts and explanations and all sorts of stuff. Once you explain to them, and part of the thing advisors have to remember when they're making that decision is, your clients at the end of the day want to know that everything is safe. They trust you. And so if you say to them, I'm leaving Morgan Stanley and I'm going to ABC firm, and your assets are going to be at Schwab, your assets are going to be at Fidelity, your assets are going to be at Goldman Sachs, or whatever it is, there's a security in that. And so there's a big ability for the advisor to leverage their resources of all the partners they have, and custodians especially. So a lot of my advisors, when they go live with us, they do like to have a marketing piece that has, their partnership with Raymond James, their partnership with, we have Schwab, Fidelity, Raymond James. They want to, highlight that, because that is a security thing for the client. And then they know that they're still going to work with Todd, or they're still going to work with Mike or anybody else. And that's the perfect combination.
Thank you.
Yeah.
Yeah. So looking back in retrospect, is there anything that maybe you might have or would have done differently in the early stages of your entrepreneurial journey, or maybe in the early stages of when you first opened up 1.7?
I don't think I would have taken on so much of the company as I did. I joke that back in the day, I was not only the sales guy, but once you agreed to join the firm, I was somehow involved in your onboarding. And once you were on board, I was somehow involved in your billing. I mean, it was, you could ask my wife, it was not fun. and I got all the phone calls. So when everybody was pissed off, they called me as well. So I would say not taking on more than I could handle was number one. That was the first thing that I would have changed. Other than that, my partner Ron, he always says that if you keep researching and analyzing and looking at options, you'll never do anything, right? It's that paralysis by analysis, right?
By paralysis.
You'll say like, okay,
Right.
we're gonna kick the can down the road 6 more months to look at more technology. We're gonna kick the can down the road 6 months to work on this again. Sometimes it's like, hey, you just gotta get in the car, drive it, and if you have a flat, you change it while you're going. And so I'm really happy that we did things that way, and we've always done it that way. We have never, since the day we started, we've never slowed down in terms of evolving the company, bringing best technology partners to the platform, finding, other partners and vendors that we could utilize, streamlining process. We've never stopped doing that, because we, from a corporate standpoint, we run a very focused, the way we run the business is very focused and strategic. And so I think that's one of the things that's the other thing I would say is from day one, having a plan of how you're going to run the company and how it's going to work and who's going to do what. That's always number one.
Gotcha.
Right.
Thank you. How do you maintain your competitive edge in the RIA industry, or any strategies for staying ahead of the curve?
Oh boy. I think one of the things is for us as a company is that we don't try to, we really try to focus on where we put people in the right seats who have the right strengths. So we have, people in operations that are passionate about operations. We have people in marketing and sales that are passionate about marketing and sales. And when you have people that are sitting in the right seats, that's what we call it, right person, right seat. When you have the right person in the right seat, they put that extra effort in to the next thing, the next idea, the next opportunity to grow. So for instance, one of my partners, Adam, who's like our head of growth, he is always looking at what technology can we bring to our advisors' lives to make them more efficient? How can we incorporate things like ChatGPT and AI into not only making 1-7 more successful, but making our advisors more successful? I'll tell you one thing. I have zero interest in any of that. I actually just used ChatGPT for the first time yesterday. I'm like the only person who doesn't even I don't even think about it, right? Everyone else in my company they're like creating marketing brochures with it and legal documents and all sorts of, and I'm just like, cool, you bring that to the table, help me use it when you need me to use it. And so, knowing what you're really passionate about, like I know the thing I am most passionate about is working with advisors and thinking about the vision of what 1-7 can offer and do that is just different outside the box and makes our advisors and thus their clients just proud to work here and proud of the experience of being part of the company.
How many total advisors do you have right now?
So we're over 40 now. So we should end the year. Yeah.
Wow.
So we should end the year well over 4 billion of AUM and 45 to 50 advisors. And the thing I love about it is we've got all shapes and sizes. We've got lots of $1 million advisors, and we've got young 30-something-year-old advisors who are really just getting their feet wet and trying to make a name in the business. And we like supporting both of them, and just helping them cultivate their ideas of who they want to be and what their business looks like. And that's really the best part about it.
That's really cool. Are you guys organically growing some of these younger cats?
So we do a lot of stuff. So the gentleman I was talking about, Adam, so we do a lot with helping them with lead generation campaigns, working with third-party vendors. We actually have a couple of our own internal lead generation sort of businesses or models. So we're really focused on that organic growth. Every week are people growing? Are they getting business? Are they bringing in new business? Or are they doing, increasing business off of what they already the first thing you always want to ask an advisor is, at least I like to ask, well, why are you growing, right? Why do you want to grow? Is it ego? Is it scarcity? Is it passion? And everybody's answer is a little different, but that's one of our core values, always be growing and have a growth mindset. And if you don't want to grow your business because you're at the tail end of it, then grow your mindset of what you want to do with your life, how you want to live your day, how you want to maybe think of a new way to engage with clients or something like that doesn't involve you going out and bringing in new assets. That's okay too.
Wow. I like that.
Yeah, I love that. I think growth is a very important thing, no matter what stage of life you're in. So, Todd, how would you define success? As a president of a firm, or if you want to say even your personal life, just as a person, how do you define it?
How do I define success? I think ultimately it's about feeling rewarded for what you're doing. And I think knowing that the people around you are happy and feel like they made, from a corporate standpoint with the business, knowing that our advisors feel like they made the right choice. That to me is success. The money, the earnings each year, profit, things like that. Those are all results of that. They're all results of advisors being happy, their clients being happy, and going back to what we said at the beginning, proud to be part of 1-7. That's definitely, to me, success.
And I had a question to elaborate on that. And if this is sort of off topic, I maybe should have asked a little bit earlier. But have you guys gotten most of your growth? Because look, $4 billion in just the short amount of time that you guys have been operating is tremendous, right? I mean, I'm blown away by it. And so, look, we talk to people that have been in business for 30 years and they're barely crossing $1 billion, right? Did you guys do that through M&A? Did you do it through just organically hiring, 4 dozen guys, gals to bring over their clients, or to organically start their business?
It's everything. I mean, the majority of the advisors that join us are people we get introduced to from one means or another, right? Whether it's a recruiter, online, some sort of online presence, a friend. A lot of our advisors recommend their friends or colleagues come talk to us. The thing, to me, as I say, if I just get the opportunity to sit in front of somebody, the story of 1-7 and what we offer is really the most compelling part of it. And so, all of these people, it started with 4 of us, and ever since then, it's just been one person after another, hearing the story, understanding the value proposition, understanding the passion of what we do. Because that's one of the things we've always focused on is no matter how big we grow, hopefully we'll be 100 advisors in a couple of years. But we say to every advisor, everybody at the firm has my phone number. Everybody at the firm has Rick's phone number, Ron's phone number, Adam's phone number. So I get text messages at all hours of the day and night, phone calls with things they need help from, or just sometimes they just get a text message with how happy they are with something that happened. That's how we do it. And it's just, again, one person after
really
another,
cool.
and
That's
we just
great.
give them that same experience of feeling like they're part of something really special, and being able to provide feedback, ask questions, get help, no matter when it is. Yeah.
Thank you. Ashley, you could take the next question from me.
Yeah, that's fantastic. So that kind of goes into our next topic, leadership. What's your philosophy on leadership? Seems like you guys have an open line of communication, just always, the ability for your advisors to always come to you with anything they need. What's your philosophy?
I think I've learned that is the first part is having that open line of communication and being proactive in communication. We're very transparent about where we are as a business, where we're going as a business, what our goals are. We don't hide that. We actually meet every 90 days. Our leadership team meets for a whole day. And from that, we create our goals for the next 90 days and all those things. And then we do a meeting with all of our advisors and all of our employees within a couple of weeks to report all of that to them. Here's the things we're trying to do. Here's the things we're trying to fix. Here's the projects we're taking on to make the business and the company even more successful for you. So I think that open line of communication, more so us from the top down, but also being open to criticism, feedback, or things that need to be improved. That's the number one thing. The other is, I think, just being vulnerable, right? Being able to admit that I don't know everything, that I'm only a 43-year-old guy who just decided to do this one day and is still learning. I think that's the other thing that I've learned is every day we're fixing things and every day we're trying to get better.
Thank you.
Yeah.
And I want to delve into the future of wealth management and your opinion on there. What does the future of wealth management look like, and how do you envision it?
The interesting thing is, and you guys probably know this, is that for years now, they've been telling us that the future is going to change dramatically, that robos are going to take over and we're all going to lose our jobs. Now AI is going to take over and we're all going to lose our jobs. The thing I always really believe is that there is going to be a human component to it, because people value what we do and the insight and the information we can provide to them. And no, we're not perfect. And no, we don't always pick stuff that is going to beat the market. And, the world doesn't work that way. But I do think that there's always going to be that human component to wealth management. And I really would love to see, one of the things I'm hoping for is that the industry becomes, it's so, there's just this feeling still of the industry. I don't know, maybe there's a feeling internally and externally of how the industry works and the type of people in it. I would love to see it become a little more grounded, advisors more, in touch with who they are and what they ultimately can do for their clients beyond just picking stocks or ETFs or anything along those lines. So that's something I'm really hoping to be a part of in the years to come.
That's great. And so what do you envision for the future of 1-7? Do you have any plans for, it sounds like you do have plans for further expansion, continuing to grow. But is there any new initiatives that you guys have on the horizon that you can share with our audience?
I think we will continue to grow because there's advisors that want to be part of what we're doing. My new passion project, which is somewhat part of 1-7, somewhat outside of it, going back to your last question, is I'm actually creating a retreat for advisors. So going back to what we talked about at the beginning, Mike, so I'm actually bringing the spiritual journeys of Costa Rica to the financial services industry.
Wow.
So I've got, we're trying to figure out the dates because obviously recruiting is the number one challenge of anything like this when you do it the first time. So what we're trying to do is get 20 advisors, could be with their spouses, could be by themselves, five or so days in Costa Rica doing, meditation, yoga, breath work, really taking time for themselves to figure out who they are and what they want and what they can offer to the world. And I think that's my next thing that I really want to start to bring to life. So, and then just take more of that and bring it to the company. And as I said, everyone doesn't have to think the way I do and do the things I do, but if they're open to at least the idea of it, then I think it's going to work.
Well, it's working for you,
exactly. Yeah,
right?
there you go.
That's so exciting. Yeah.
And let me ask you this, what steps is your firm taking to retain the next generation of investors?
To me, and I don't think we're any different than other firms, I think, it's about bringing in younger advisors who can, and that's the hardest part of this industry, is being a 20-something or 30-something-year-old advisor and trying to make it. Everyone knows the statistics are not good. So I think the first thing is, as a firm, how can we help younger advisors make it in the business? Whether it's become part of a succession plan for another advisor, build their own book of business, whatever it is, and then really put things in place that can help create conversations between that older generation and that next generation. Because, there's plenty of younger clients that are just going to want to go and buy ETFs and do it on their own and not worry about it. But again, at the end of the day, they do enjoy that feedback. They enjoy somebody giving them some advice, some insight, talking them off the ledge when the markets get volatile, whatever it is. So I think that having that conversation, presenting seminars, things like that to help facilitate those conversations is really what's going to make the difference.
So to elaborate on that question there, I've been not in the RIA space for my whole career. I've been in finance for my whole career. And a lot of what I ran into in the early 2000s was, we'd hire, these kids right out of college, guys and gals, and they were very loyal. They stuck with us for years. And then, in my next go around of hiring, early, probably 2013, 14, I didn't get that same loyalty, right? It seemed like maybe the market was better. There was more options. It would be almost like we'd get utilized to get licensed. And then they'd go out, and once they got licensed, they go out and shop the different companies to work at and take signing bonuses. I'm not sure if you've experienced the same, but how do you get that loyalty in there? It's obviously expensive for a company to hire these guys and gals grassroots, train them, get them to get their license, build a book of business. What keeps them there as opposed to maybe a wirehouse going to them and saying, hey, listen, we're going to pay you $750,000 for your book of business. Come over to us.
Yeah, I think what's worked for us over different phases of the business is opportunity. So we've got some younger advisors that started off in one role, maybe as an analyst or doing some sort of analytical work inside the firm, and they've grown into having clients, being part of groups and teams and things like that. So I think anything, whether you're hiring someone as a W-2, whether a 1099 advisor, just presenting opportunity for growth is really, to me, the difference maker. Everybody just wants to feel appreciated. Everybody wants to feel acknowledged. Everybody wants to feel a part of something. And when you do that, when you create an environment where they are being invited to things, where they're part of the conversation, where they're sitting in a room with, multi-million-dollar advisors, and they feel like, okay, I could be there, that keeps people around. And so we've had, great success in employees staying, and we've had great success in advisors staying over the years that we've been doing this, because people don't want change. Advisors, I hear all the time, this is my last move. I don't want to do this again. And I really believe that that's the case. And they want to know that what you promised them and what you offered them are really what they get. And as long as you stay true, to your word, right? Here's what if it's as simple as here's your payout and here's the technology you're going to get, and we're going to leave you alone and let you run your business. If that's what they want and that's what you give them, you're not going to have any problems. Because the money is the money and the growth is there. They just want what you tell them you're going to give them. And that's one of the problems I think that at least we try to take advantage of, is that's the opposite of what you get in a wirehouse traditionally, right? Every year it's like, hey, you got this, but now you didn't do enough production to get your own assistant. Now you didn't do enough production to get this payout or this bonus, or now you got to do this to get paid something, or you don't get paid on this types of account. Every year there's they're moving the shell, and they're moving the target for people. So we try to really, when advisors join us, we lay out for them how it works, and we don't change it. And they know that every year it's going to be the same going in and the same at the end.
I like that.
Yeah, that's a great point you have there. So we'll kind of go into technology. I know you mentioned AI before, but really, what are your thoughts on how AI is going to impact the wealth management space? I know that you just tried ChatGPT for the first time.
I'm almost embarrassed to say that.
But do you see it? It's
for a while.
I know my mom hasn't tried it either, so at least I got that going.
It's an animal in itself. Yeah, it's almost like you need a manual to know how to get the right answer in it. But do you see AI impacting the wealth management space? Is it going to change potentially how financial services are delivered?
I think it will. I think, at least from what I'm experiencing, it's still a work in progress. It's still, ChatGPT just came out this year. I can't remember what month it was, right? But it's less than a year old that we all know what it is in terms of the usage. So I think there's still that to be determined of how it's incorporated into wealth management. Obviously, it can help us with, I think it can help us with our process and our marketing, all of those things it can very easily do. I don't know yet how it's going to be able to, tell us which stock to buy and know that it's going to outperform other stocks. And maybe it will, right? Maybe, and I've actually met with someone the other day who said, okay, we're using AI to basically know when to go in and out of the market. And, when you look at it over 12 years, here's what the results are. And the results are staggering. And I'm like, yeah, but does it, that's great. And if the back testing is as accurate as the future, then I would put every dollar into it, right? But, my question was, well, where does the human component come into it? And if this guy's listening, I'm not trying to pick on him. I'm just trying to raise a point of like, if you're using technology and you say, we're only going to use technology, great. Then you're living and dying by that technology and the results. If you're incorporating a human element to it that can override the technology, then it completely changes the results for the future. So I think there's always going to be that give and take of human and technology. And I don't yet know how it's all going to work together. I think it's going to make us more efficient. I think it'll make us better at what we do. I don't know how it's going to change the results yet. I'm curious to see.
Yeah. You know what? I'm very curious about that as well. I know that, somebody had pitched me recently on one of those one of the trading bots. Like, I guess they're like robots that trade for you, right?
I haven't seen that yet.
Have you heard of those? Right? Oh, and they're like, well, if you buy the one that's like $60,000, it's guaranteed to make you $17,000 a month if you invest $100,000. And I was like, so, but if you buy the one that's $20,000, it's only going to make you like $4,000 or $5,000 a month. And I was like, how do you tell? How does that get measured? Right?
It just seems like such a hoax to me. Right? I would agree with you, but I think there's going to be, and I think for us in the industry, that's something to be mindful of, is how is that going to play out? How are we going to know the legit from the scams, if you will? And I'm not saying that was a scam, but like, how do we know that that's a viable solution for us and for our clients? And time will tell, obviously.
And let me ask you this: getting into some exciting investment opportunities, and you can choose not to answer this question because I don't want to pin you in a corner. But what investment opportunities or sectors are currently capturing
I
your
told you
attention
before,
and
I'm
your
not
interest
going
at
to
the
answer
moment?
this one because there's much smarter people out there than I am.
Okay.
I don't think an advisor's time, for the most part, there's plenty of advisors out there that are investment guys and girls through and through. But for the majority of advisors, I really do believe, and our firm believes, that your time is best spent sitting with clients and talking to new clients. And if you're not doing one of those, go out and spend your life doing what you want, and spending more time with your kids and family and things like that. So I believe that there's people that spend 24/7 analyzing the stock market, analyzing the economies, analyzing sectors. Okay, let's use those people that do that as a living. My other side of it, the thing I am interested in, and this isn't anything that I don't think it's groundbreaking nowadays, is I am personally very intrigued by this private credit, private equity space that is really blossoming. My biggest concern of it is that everybody seems to be doing it now. So when everybody does it, it's probably the wrong investment. But I like that companies are bringing what is traditionally for the uber wealthy and ultra high net worth. They're bringing that down to the everyman, every woman sort of investor. I think that's a huge opportunity that is really untapped at this point. So that's the thing I am excited about. And everything else, I'll tell you, there's someone else probably smarter than me knowing what the answer is.
Thank you.
That's funny. I think one of our guests the other day actually said the same thing, and it is an exciting opportunity. That's
It's
out there right
incredible.
now.
It's incredible,
So
and I
looking
think
at
it
Yeah.
doesn't mean, I don't think it's necessarily something where, because you talked about how large the private sector economy is versus the publicly traded. I don't think I don't believe it's one of those things where there's this bubble that everybody's going to do it all of a sudden and it's going to blow up. I think there is so much opportunity out there that is being tapped into, that has been tapped into for 30, 40 years, that now we can all experience it.
Right.
Right. Yeah. So looking at the economic outlook, what do you think's in store for the economy? I know that's kind of a loaded question there. But current economic landscape, anything in the near term, what's your
I don't know,
prediction
because
there?
everybody
versus
predicted a
possibly the long
recession this
term?
year, and look what happened. So I think Morgan Stanley fell on their sword a couple weeks
Yeah.
ago about how they were wrong. And I still don't think being conservative in the overall is the wrong thing. I think there is a lot out there that somehow this market has really been had a great recovery from last year, but there is a lot of probably more headwinds out there than tailwinds, with interest rates maybe going up even more, with inflation that is coming down but still high, with I just can't, I don't know how it keeps going how it has been for all these years for the for the foreseeable future. I think there's got to be some break in that. I'm not going to sit here and say when or what it'll look like, but and I don't think the sky is falling, but I also don't know how we just go another 5 years of great, everybody has a job, no problems, companies make money hand over fist. Something's got to change at some point, I would think.
I agree with that. And I brought that up to a colleague of mine, and she said to me, she said, "Well, do you remember though, 10 years ago, you used to not be able to press a button on your iPhone and reach out to 1 billion people, right? And because of that, it's created a lot of opportunities in the marketplace, and in the stock market as well. Again, it's beyond my it's beyond my pay grade, right? I don't understand the market is, to that degree. But I agree with you. I think that in one end, how can it keep going? And then on another end, we've been hearing about this recession since 2017 that
Right.
still has not occurred
And the
yet,
thing
right?
that's
So,
really, I think the thing that stands out about
yeah.
it is, and I remember Bernanke, I think it was a couple of years ago. I don't know how many years ago it was at this point. Who can keep track? But he goes, you're never going to see like a 4% treasury yield in our lifetime again. Well, here we are at 4%, right? So like everything since 2008, everything that's happened is pretty much unprecedented, right? From all the bailouts to to economic tightening, to COVID, to all this stuff. It's never happened before. And so I think to your colleague's point with the, referring to the iPhone, like all bets are off, right? I don't think any of us have a clue what's going to happen tomorrow, because who thought, 6 months ago that we'd have this, going back to ChatGPT, this thing that could basically do every single thing for us, creatively or business wise. Who had thought that was there? So yeah, it is unprecedented times, and the economy has never really happened in this fashion before. The Fed's never had to do stuff like this necessarily before, maybe in the 80s with inflation. But I think none of us are going to be right and none of us are going to be wrong. We're all just going to figure out what it is tomorrow. So
Right.
Absolutely.
And how do you assess the current economic landscape? And I think we kind of went over some predictions that you may have there, and on your outlook. What do you think the outlook is for you guys personally? Do you guys, in regards to, I know you said you wanted to grow to 100
I think
advisors
that's it.
there.
Next few years is just doing the same thing we're doing right now, which is taking opportunities to talk to good advisors about the opportunities that are out there in the independent space, and specifically, our firm 17. And everything else, the economics of it, the results of it, all that is just a result of us doing the things the right way. Everything we've talked about today, innovating, problem solving, supporting our advisors, being their partner, and not just taking a gross amount of their paycheck. That's what's going to make us successful. And I think in turn, that's what's going to give our clients the best experience of being part of the company as well. Thank you.
Thank you.
Yeah,
I appreciate that.
Sounds like your firm has the right on the right track there. And thank you so much, Todd. We really appreciate your time today and sharing your thoughts and insights with us and our audience. Really excited to see what the future has for 17, and you'll have to let us know when you have that wellness retreat all worked out. I'd love to take a peek at that.
Sure.
That's super exciting.
Thank you both. I appreciate it.
So thank you so much. Yeah. All right. And to our listeners, thanks for tuning in to another episode of the What Matters podcast, where we talk about what really matters in finance. Thanks, everyone.